phone up?
Yep.
Let's see if it has my topic. I don't see my topic up there.
It was.
Hey, Linda. I don't see my topic up there.
It was up there first. So you
Okay.
pressed it.
Hi, I'm Betty. I'll give you a few. I'm late today. I'll give people a few more minutes to join. Can y'all hear me okay? Hi, Diana. Hi, I'm Fanny. Okay, so tonight, welcome to Tammy's Tuesday Tidbits with the Diamond Diva. I am on my treadmill tonight. I came home late because I got home late tonight, so I normally do an evening workout. So you guys will be working out with me tonight. Hopefully you can hear me okay. And tonight is very important. I'm in my element. I'm going to be talking to you tonight about the loan process and why now is a great time to buy a home or refinance. For those of you who don't know me, I'm Tammy Moore, the Diamond Diva of Diamond Residential Mortgage. I'm licensed in 12 states. And on these lives, I talk about everything related to fitness, finances, faith, fashion, and food. And tonight, I'm definitely going to be talking about finances. So, as you probably have heard, because of all of the coronavirus, the rates have dropped and the interest rates have dropped. And so I want to tell you what that means for you. And a lot of you who are on the fence about buying a home or refinancing, now is a great time. You never know when the market is going to take a turn or when it's going to go back, so do it now. So if you are renting right now or on the fence about buying a home, this is the time to do it. The market is coming back. Interest rates are low, property values, and right now it's a seller's market. Right now, sellers can list their homes on Friday and have 5 offers by Sunday. So don't delay. Take advantage of the low rates. But what I wanted to talk to you first about, I'm going to give you some information on refinancing because I'm getting a lot of questions about it, and I wanted to answer it. Can everybody hear me okay? So, as I mentioned, I am licensed in 12 states. So if you are looking to purchase or refinance, shameless plug, call me. What you want to do for your refinance is, if you have an interest rate of, I would say, 4.5 or higher, it would probably benefit you to refinance. The question that people ask me all the time is it worth it for me to refinance? And we have what we call tangible benefits. If you have an FHA mortgage, it has to be worth it for you to refinance. I can see my shadow over here. It has to be worth it for you to refinance. FHA will not allow you to just refinance unless there's a tangible benefit to do it. But if you have an interest rate of 4.5 or higher, if you're paying mortgage insurance and your property values have increased, you can possibly remove your mortgage insurance. But we won't know any of that until we have a consultation with you. Don't get on the phone and shop rates. And I'll tell you why. Rates are determined by your credit score, your loan to value, the type of property that you have. So when you get all of these letters in the mail that says, oh, rates are 2% and call us now and we can refinance you and all this stuff, they have no clue about your situation. And your rate may be different from the person next door to you simply because your credit score may be different, the type of loan that you have may be different, and the value in your house may be different. So your situation is not going to be the same as someone else's. So I just had a situation tonight before I left work. That's why I'm talking and walking at the same time. Anybody that goes to the gym with me, this is how I look at the gym. Oh, and the business that I'm featuring tonight is Quest Fitness. My personal trainer, Marcone Edmonds of Lake Bluff, Illinois. He's my personal trainer. I work out with him on Tuesday and Thursday. My husband is moving the camera, move it back over. I work out with him on Tuesday and Thursdays, and I love him. So he's got me working out in the morning and at night. So this is my evening workout. I got home late today, so I figured I would get it in while I was on the treadmill. And the reason that I did it on the treadmill is because I saw another YouTuber work out on the treadmill, and I could still understand what she was saying. So, hi Carlotta. Can you refinance if you purchase home? Yes. Great question, Marilyn. Okay. So, if you have made at least 6 payments on your home, you can refinance. You have to wait until you've made at least 6 payments. Not been in your house 6 months, 6 payments. And the reason is because when you buy your house, your payment's not due until usually the month after. So if you close in March, your payment's not due until May. So you have to make 6 payments to refinance. Now, some of the other questions are, will I have closing costs? Yes, you will have closing costs. Most of them will be rolled into the loan. Sometimes they can be built into the rate, and you won't have to pay any closing costs out of your pocket. Our goal when we refinance you is for you not to pay any closing costs out of your pocket. But the way that we try to look at it is, will you recoup your money in 3 years? That's a rule of thumb. If you recoup your money for refinancing within 3 years, the refinance is worth it. What I always recommend, let's say you have 4.75 and you refinance to 3.25 and you save yourself $125 a month. People always want to know, do I go back to if I have a 30-year mortgage, do I go back to a 30-year mortgage? And the answer is yes, you can, or you can reduce your loan term. But think about it. If you have conditioned yourself to already make that larger mortgage payment and you refinance and save, why not double the benefit and continue to pay that higher mortgage and pay your loan off early? So now it doesn't even matter that you went back to a 30-year mortgage, because you're going to pay the $125 that you saved and accelerate your mortgage. Refinancing, going down about a point, saves you about $20,000 to $30,000 in interest. Meaning, that's a big deal. So, should you refinance now? Absolutely, if it benefits you. Now, for those of you that have a lot of equity in your house and you want to know if you should pull money out to pay off high interest credit cards, if you have enough equity, right now, mortgage companies can only refinance about 80% of what your house is worth. So let's say if you have $100,000, your house is worth $100,000. You can only cash out $80,000. So if you only owe $60,000, you have $20,000 available, minus closing costs, to pay off debt. Should you pay off high interest credit card debt? Absolutely. You know why? If you're only making the minimum payment on your credit cards, it's going to take you 30 years to pay those credit cards off anyway. So why not pay them all off, put it in your mortgage, have a lower payment, because your mortgage only goes up about $5 per thousand. So that means your mortgage payment, if you took out $10,000, would increase about $50, and you're probably paying, if you have $10,000 in credit card debt, you're probably paying about $250. So that's going to save you about $200 a month. Same thing, take that $200 a month that you're saving and put it towards either the mortgage payment or put it in a savings account. Don't go back and create new debt. Don't go back and buy a car or something. Use your money and be smart with it. The key to paying off credit cards when you refinance is to make sure that you don't go back and use them again. Because then you will have rolled them into the loan, and then you're going to go back and use them again, and you defeated the purpose. So you have to discipline yourself enough to pay off the credit cards and then refinance your house and save. And then before you refinance, think about your plan. If I save $150, what am I going to do with it? If I save $75, what am I going to do with it? your answer should be one of a few things. Save it, invest it, save, invest, pay extra on your principal, or pay something else down. That is how you start to become debt free and be smart with your money. So those are excellent ways that you can utilize the money from your refinance. Okay. Is an appraisal necessary? I just wrote down all these questions everybody's been asking me all week. My phone has been blowing up, and people are asking questions about refinancing, and I try to answer them all for them. But the one thing I will tell you is that if you pick up the phone and call a mortgage company and say, what's your interest rates? You're going to get a barrage of questions, because it does not matter what the news says the interest rates are. That is not your rate. There's so many factors that go into that. For the simple thing that you could have a condo and not a single family home, your rate is going to be different from a base rate. So when you're getting these quotes, you can ask them what factors went into determining your rate. Your credit score, your loan to value, which is the difference in what your house is worth and what you owe. So there's a lot of things that go into it. I had somebody call me today and tell me that somebody else got a lower rate than them. And I'm like, yeah, because their credit score is completely different than yours. So credit scores, even if you have the worst credit, and we go down to a 580 credit score, and I'm not saying that's horrible, you can still get a great rate right now. Your rate's still going to be somewhere in the fours, even at 580. That's amazing. So don't feel like, the way you have to look at it is, do you buy a house now, or do you wait till your credit score goes up? Well, if you wait till your credit score goes up, the property values are going to be higher, because the values are climbing. The property values are going to be higher, so you're going to pay more for that house later, and it'll probably balance out to be the same. Now is a great time to buy or refinance. If you are renting, you have no return on your investment, period. You that are renting next year will have the same asset next year. If someone buys right now, their house will have at least appreciated by 5%. The average is about 7%. So that's like money in the bank. So what do you have to lose? If you are not ready, if your credit score is not high enough and you're not ready to buy, call for a consultation and find out what you need to do. Rates will probably be low for a minute. They're volatile. They change every day. It's another thing. You get quoted a rate yesterday. The market was volatile today. They went up a little bit. Tomorrow, something crazy will happen. Somebody will say something stupid, and they'll probably go back down. But until you are locked, you are gambling just like the stock market. So while you're out shopping rates, just know that there's a possibility that when you come back and decide that you want to refinance or purchase a home, those rates could be different. They change every day. And if something crazy goes crazy in the market, they can change twice a day. We'll get a reprice in the middle of the day stating that rates have changed for the worse. Okay, let me get some water. Okay, so when you refinance your house, we have to start what we call you all have an escrow account. So every time you get a new mortgage, we start a new escrow account for you. What happens with the money that the current mortgage company has, they send it back to you. That's another way for you to accelerate your mortgage balance. When you get that escrow check in the mail, because we've already set up one for you, take that money and make a principal payment on your mortgage, or pay down some high interest credit card, or put it in the bank. Maybe I missed the answer. If you refinance, answer about if you purchase. Okay, so if you purchased a home in the last 6 months, you have to make 6 payments, Helen. So you have to wait until you have made 6 payments. Not that you owned it for 6 months. You have to wait until you've made 6 payments to refinance. And FHA's rule is 210 days, which I think comes out to a little over 6 payments. Everybody has a little calculator that they use. So you won't be able to refinance right away. Okay, let's see what else I have on here. Escrow refunds, keep paying the same. Tangible benefits. So this is my rule of thumb for refinancing. I am not going to refinance you if it's not worth it. I'm just not going to do it. Now, you have people out here that will convince you to that's why FHA changed their rules, because people would be refinancing, not really saving any money, just to skip the 2 months payments or whatever they used to be able to do. This is your equity. So my goal is to not add as little as possible onto your current mortgage, get your interest rate down, and have you save some money. And when you come in to see me, I'm going to counsel you about it. So that's why you should work with me and not go with somebody on the internet, shameless plug. Because I'm going to try to explain to you what you can do with the savings, what the refinance costs, what the new loan amount is, give you some options. You know, some of you have been in your house 5 years. I had somebody that came to me yesterday that's been in their house 5 years. So we're going to go with a 25-year mortgage. They're still saving money. They're going to keep paying the same amount. So now they've accelerated their mortgage even more and have not lost any time. So do what's best for you. The most important thing that I tell everybody, especially with purchasing a house, your situation is unique. So once you start comparing apples to oranges, you're going to get yourself frustrated. Because when you're talking to your friend, you have no idea what their credit score is, what the value is in their house, what type of loan they have, or any of that. Do what's best for your situation. Okay, now I want to talk to you about the loan process, because I've been doing this for 20 years. It never changes. I get the same questions over and over. And I have to realize I do this every day for a living, so it's second nature to me, but it may not be second nature to everybody else. When you get a home loan, the way you have to look at it is, always ask yourself, would I lend myself $300,000? Would I give myself $100,000? If you would, somebody came to you right now and asked you to borrow 100 grand, you're going to have some questions, as you should, because that's a lot of money. I don't care how much money you have. It's a lot of money to lend. Okay? Even if they want to borrow $50,000, somebody comes to you and says they want to borrow $50,000, you're going to have some questions. What do you need it for? When do you plan to pay me back? How do you plan to pay me back? How do I know you're going to pay me back? And, you know, can you set it up on auto pay? Can you sign a note just in case I have to take you to Judge Mathis? So, same thing with the mortgage company. Mortgage companies, the market crashed in 2007. Okay? The market crashed because anybody with a pulse could get a loan. So what they did was they changed that. They created a lot of new guidelines, created a lot of new headaches for us that we have to document. Meaning we have to document where your money comes from. We have to document that you really have a job. Because people used to have fake pay stubs and all this kind of craziness business going on, and they would get home loans. Well, now they've stopped all of that. So your loan process, what I normally do is I ask for everything up front so that I can look over it, and they still have questions. For example, you need $10,000 to close. You don't have $10,000 to close, but you got $10,000 at home. That does not work. You cannot use money that you have at home. Every penny has to be documented. So, if you are coming to buy a home and you have money at home, you need to let your loan officer know. Your job. How long have you been on your job? Is it stable employment? Have you quit? Have you been on this job for less than 30 days? Do you have a 2-year work history? A lot of times with the loan process, people are like, well, why do they need to know all of that? All they want to make sure is that your money is clean. You didn't borrow it, because you cannot buy a home with borrowed funds, and you have stable employment. It's the same premise if you were to lend somebody 100 grand. Wouldn't you want to know that they have the ability to pay you back before you release that much money to them? So you have to take a walk in our shoes sometimes. I don't like asking the customer for anything more than what I need. But if I need it, I need it. I always say, help me help you. The underwriters have to sign their name to your loan. When we originate a loan for you, our name follows you throughout the loan process. Whether you pay the loan off, whether you sell the house, or whether it's foreclosed on. Our name is attached to it. Everybody's name is attached to the loan. The appraiser, the underwriter, the processor, the title company, the realtors. So if something goes wrong with that loan, that's our good name. And your good name is all you have. So when you're getting a loan, trust the loan person, trust the expert that they know why they're asking you for what they're asking you for. Now, when you come to get a refinance, there's a couple of type of refinances. If you have an FHA loan, you can do a streamlined refinance. That means all we verify is your credit score and that you made your mortgage payments on time. And we don't have to get into your income and all that good stuff. There's also a possibility you won't need an appraisal, which saves you about $450. But that's all dependent on your situation and your credit score. Now, if you come in and you have some issues going on and your credit score is not that great, we're going to require a lot more documentation. If your scores are not great, you are not going to be able to get the market interest rate. I'm just telling you that right now. I don't care what anybody tells you. You're going to get all these letters in the mail about what the interest rates are. You are not going to be able to get the lowest interest rate. Just like when you go to buy a car, if the rate is 1.9 that they post on TV, 1.9 is for somebody that has a 750 credit score or higher. It's in the little fine print. So when you see all of these interest rates out here, know that they're going to add on based on what your credit score is in your situation. So I just recommend that you do what's best for you. And should you refinance or purchase a home now? Absolutely. Don't be in fear. If you are renting, you are ready to buy because you have conditioned yourself to pay your rent every month. So I guarantee you'll be able to pay your mortgage. You can get in at a low interest rate. If you refinance now or purchase a home now, chances are you probably won't even have to refinance again unless you sell your house because rates are so low. So are there any questions about that? Let me make sure I covered everything. Hey Renee, hey Vanessa. I'm getting my workout on. Hopefully y'all can hear me okay. It's not too distracting with my head bobbling like a bobblehead. Any questions on refinancing? So if you want to have a consultation about refinancing, you can call me, you can text me, you can inbox me, or you can email me. And the link to my website is in the description, I believe. I hope it's still in the description. That you can go and apply online, and I'll run the scenario. Here's the other question everybody asks. Do you have to run my credit to quote me a rate? Yes, we do. And I'll tell you why. Your credit score will determine what your interest rate is. And I have to look up the value of your house. Because the last thing that I want to do is quote you a rate based on what you told me and then find out your situation is completely different. I'd rather give you the accurate information up front. A mortgage inquiry doesn't drop your score like the rest of the inquiries do, and it's worth it to know. And once you get it ran, if you want to shop the rate, then you know what it is, and you can tell the next lender what your credit score and all that stuff is and get their quote you a rate. So the one thing with dealing with someone local is it's going to be faster to close your loan. When you're dealing with all these big companies, they have a big book of business. You're going to be 90 days out trying to refinance. So, shameless plug, sorry. This is what I do 24/7, eat, sleep, and drink mortgages. That's why I was late today, and I'm trying to kill two birds with one stone so that when I get off of this live, I can be done with my workout as well. But yes, it is a great time to buy. It is a great time to refinance. Don't delay it. Let's see what else I have on here about the loan process. Oh, I know what else I wanted to say about the loan process. Being self-employed. Had a couple people come to me that when they bought their house, they had a regular job, and then now that it's time to refinance, they started a business. If you don't qualify for the streamlined refinance, we got to get all in your business. We got to see how you filed your taxes and all that good stuff. And listen, y'all, what you made versus what you filed on your taxes are two different things. If you made $200,000 in gross receipts and you only pay taxes on 50, we can only use the $50,000 for income. Okay? A lot of people get frustrated by that. You cannot not claim the income with Uncle Sam and then come back and get a mortgage. We do have programs. They're called bank statement programs for people who are self-employed and write off their income, but they require 10 to 20% down. So you can't have it both ways. You can't tell the government that you had $150,000 in expenses and you only made $50,000 and then turn around and use that same $200,000 to qualify for a home. Unfortunately, it doesn't work that way. And the reason it doesn't work that way is because at some point we did a lot of loans for people based on the gross income, and that was a high foreclosure rate. They're not trying to be difficult, they're not trying to be rude, they're not trying to be mean. We're just trying to be fair, and we're just trying to make sure, thank you honey, we're just trying to make sure that you can afford, we're just trying, that's gonna be loud. We're just trying to make sure that you can afford what you're buying. The last thing that I want to do is set you up to fail, period. A house is a blessing, and we want it to be a blessing for you. We do not want you to overextend yourself and get into something and say, Lord, what did I do? So if you do have the opportunity to refinance, really take a step back and think about what you want to do with that extra money that you're going to have every month. Whether it be $100, whether it be $200. I have a customer now that's saving $286 a month on the refinance. I have another customer that's saving like $600 a month on her refinance. She had a different type of loan. So what are you going to do with that money? You can either pay extra on your principal, you can save it, you can invest it. Now is a great time to invest in the stock market. The stock market is in the tank. All of these stocks that were expensive now, before, are low now. Take that money and buy some stock. It's going to go back up. You'll have a good return on your investment. So there's a lot of things that you can do with the money that you're going to save. You can put it in a savings account, you can invest it, you can pay extra principal on your mortgage, or you can pay down high interest credit cards. It's a great way to accelerate your debt and become debt free. Let that money from the refinance work for you. Okay? Are there any other questions? So I have been working. I have my camp set up. We have everybody ready. So as many refinances that come in, we're ready for them. And as many people that want to purchase, we're ready for them. It's a great time. Unfortunately, when the stock market goes in the tank, the bond market changes and interest rates get low. So take advantage of it, because if you are paying your rent, there will be no return on your investment. You will be in the same place you were at the end of your lease. Start a new job. Can you get, yes, Shauna, great question. You can buy a home as long as you have a previous 2-year work history and you have been on your job 30 days in the same line of work, and you didn't move to self-employment. You can buy a house. Absolutely. Any other questions? We just have to have your first paycheck. So Shauna, I'm gonna be expecting to hear from you. And so when you call to check on refinancing too, think about this. If you've been in your home more than 4 or 5 years, think about going to a 25-year mortgage too, instead of going back to a 30-year. But like I said, even if you go back to a 30 and you take that money that you saved and you pay extra on your principal, you're still going to accelerate your mortgage. Probably, if you pay one extra mortgage payment a year, you take 7 years off of your mortgage anyway. But if you take the money that you saved, you can probably pay that loan off in 20 years. So be wise with the money. When you get your escrow refunds, all of these things that are going to happen when you refinance, be smart with it. Hey Brandy, Shauna, you ready? Okay, I'm ready for you. Let me get some water. Hey Candace. Hi Nikki. All right, I don't have anything, I don't think I have anything else for you tonight. Eventually, I will have my trainer on. You'll get to see us do some workouts together, and I will tell you about my 5 steps to fitness. The fitness. Candace is one of my in my keto group. She's doing amazing. She's been doing really good with keto. So kudos to you, Candace. Let's see if I got everything else. I think that's it. I think I got everything else. Hey, Candace. All right, if there's nothing else, like I said, tonight I'm in my element talking about refinances. It's a great time to do it. It's a great time to buy. Okay, I will. It's a great time to buy. So don't delay. Get pre-qualified. And the way you have to look at it too is this is March. Even if you're not ready to buy, you may be ready by summer. And that's when most people who have children put their house on the market because they don't want to disrupt their kids' school year. So there will be more inventory in the market during that time. So that's when you have 3 months to get your credit score together, to get your finances in order. We have down payment programs that we are linked with that will give you up to 5% towards your down payment. So if down payment is an issue and you're in the median income limit, it's not an issue anymore. So take advantage. And you know what? If you don't try, you will never know. If you call and you get called to get pre-approved and you're not ready, at least you have a plan. At least you have something tangible that you know you have to take care of. Now it's up to you to take care of it. But rather than just sitting saying, I know I can't afford a house or I'm never going to get pre-approved, how do you know that? I've had a lot of people call me and say, well, I know my credit's not in the best of order, and their credit is excellent. So, you know, what you think is bad may not be bad to the mortgage company. Off topic, let's see what's that. Have you read the book, The Circle Maker 40-Day Prayer Challenge? No, I haven't. I need to add that. I'm reading, what is the name of the book I'm reading right now? Oh, Think and Grow Rich. I'm reading that again. So I'll add that to my list. I try to read a book a week. I'll add that to my list, Marilyn. Thank you for the suggestion. Hi, Taisha. So now is a great time. My website is www.diamonddivas.com. It should be in the description. Hopefully my description is there. If not, I will post it in the comments. Just go on there and fill out your application. It's going to ask you to upload some documents. We need those documents. So last thing is, you know, what you tell people tell me all the time, oh, I make $50,000 a year, and then I get it and they make 30, and they're like, oh yeah, but my boyfriend pays me rent, or my daughter gives me $400 a month. I can't use that. So I always have to look at your income documents to make sure of everything. So we're not being nosy. We're just trying to make sure that we give you accurate information before we turn you over to a realtor to look. That book is powerful. If you do, please do a live about it. Okay, I will do that. I'll do a live. I'm going to add it to my list of the next book I read for you, Marilyn. Anything for you, Marilyn?
That's Denise.
Yeah. Marilyn is my one of my girlfriends. She's special to me. Okay. Hey, Tracy. Oh, hi, Miss Robinson. Miss Robinson, I did a workshop on professionalism in the workplace last week at Community Action, It was amazing. And I was talking about you. It was Head Start teachers and bus chaperones and all that. And I was telling them how impactful you've been in Devin's life and how you taught us how Devin learns. So I was telling them that how one teacher can change a child's life. So we always talk about you. So anyway, you guys, I'm going to sign off. If you have events and you need a motivational speaker, or you need, hey Keisha Pooh, and you need, I facilitate workshops, whatever you need me to talk about that I have expertise in. I will not talk about things that I don't know. Those who can't teach, and that's not me. But if it's something that I know, something about that I'm well versed in, and you want to have me for a workshop speaker, just reach out to me. Love you too, Miss Robinson. All right, y'all. I'm going to finish my workout. Peace out. Refinance or purchase a home now. Don't delay. The market is volatile, and you know that if Trump says something crazy, we don't know what the market might do. So don't miss the opportunity to get a lower rate and save you some money, and then that'll free up your finances, money to do other things like pay off debt, pay down your mortgage. Everybody that has a mortgage right now should at least be paying one extra mortgage payment a year. You should never plan to have that mortgage for 30 years. So if you just do one extra mortgage payment a year, you'll pay your house off in 23 years. So, at least do that. And that's not a lot. You could do it at tax time. You can do it around the holidays. You don't have to do it every month, but just do it once a year and accelerate that mortgage, and it saves you about $20,000 to $30,000 in interest. So help yourself, save you some money, pay down those high credit card debts with the extra money that you save from refinancing. So that's all I have tonight. Thank you for joining me. And if you have any questions about refinancing or purchasing a home and you want to get pre-approved, please reach out to me and let me know. Okay, have a good night.